A wonderful day to you all. Welcome to Nifty Sense, the hidden narrative of the Friday fracture. Have you ever seen a grand building that looks perfectly solid from the outside, but inside, the heavy machinery is being moved out through the back door? That was Dalal Street today, January 23, 2026. While global markets were celebrating a Greenland peace, Trump rescinding tariff threats, the Indian indices suffered a sharp fracture. The mystery: why did India fall while the world rose? The answer lies in a summons storm and a record-breaking currency slide. Stay with me as we decode why the institutional footprint is leaving a trail of breadcrumbs in sectors you'd least expect. Closing figures, January 23, 2026. Nifty 50 to 25,048.65, down by 241.25, minus 0.95%. Sensex, 81,537.70, down by 769.67, minus 0.94%. India VIX, 14.38, up by 6.49%. The fear gauge is heating up like a pressure cooker. Top 10 impactful headlines. Adani storm: Adani Group stocks plummeted up to 13% following reports that the US SEC has sought permission to serve summons to the group. Rupee's record fall: the Indian rupee hit a fresh lifetime low of 91.93 against the US dollar. Greenland relief: President Donald Trump rescinded tariff threats on European allies regarding Greenland, sparking a rally in US and Asian peers that India failed to join. Institutional exodus: FIIs extended their selling streak to 13 consecutive sessions in January. Earnings drag: IndusInd Bank reported a massive 88% YoY drop in net profit, 161 crore rupees versus 1,402 crore rupees, signaling structural stress in unsecured lending. Aviation turbulence: Indigo, Interglobe Aviation, saw profits crash 77% due to exceptional losses and operational costs. SaaS milestone: Amaji became India's first cloud-native SaaS company to list, marking a pivot in the institutional footprint toward platform-based businesses. Energy maneuver: ONGC entered a strategic 50-50 JV with Japan's Mitsui O.S.K. Lines for ethane logistics. Budget fever: markets are showing pre-budget jitters as investors anticipate policy shifts for the FY27 union budget. Steel surge: JSW Steel defied the gloom with a 3x surge in PAT, 2,410 crore rupees, driven by domestic demand. Sectoral pulse: top 3 gaining sectors: Nifty FMCG, plus 0.45%, the economic insurance sector; Nifty IT, plus 0.20%, defensive accumulation amid a weak rupee; Nifty Healthcare, plus 0.15%, anchored by Sun Pharma's weight loss drug news. Top 3 losing sectors: Nifty Realty, filled down pointing triangle 3.00%, interest rate sensitivity biting back; Nifty Media, filled down pointing triangle 2.37%, continued structural weakness; Nifty PSU Bank, filled down pointing triangle 1.57%, fear of rising slippages. Institutional flows: FII net activity, down by 4,113.40 crore rupees, net sellers; DII net activity, up by 4,102.60 crore rupees, net buyers. Analogy: it's like a massive game of tug-of-war. The global tourists, FIIs, are packing their bags, while the local residents, DIIs, are buying the furniture they leave behind. Market breakdown: why the floor gave way. To understand today's move, think of the PE ratio, price to earnings, as the price tag on a business. For months, India's price tag has been premium. When the rupee falls, structural weakness, it's like a hidden tax on foreign investors. Imagine you own a shop in a foreign country. Even if your shop makes a profit in local currency, if that country's money loses value against your home currency, your real profit shrinks. This is why FIIs are selling. They aren't just betting against Indian companies. They are hedging against a weakening rupee. The Adani summons acted as the black swan event, triggering a domino effect in high beta stocks. Sun Pharmaceutical Industries, relative strength. The narrative: while the index bled, Sun Pharma held its ground. The value moat: they received DCGI approval for a generic semaglutide, the Ozempic of India, for weight management. Analogy: think of this as a patent-protected shield. In an economy where lifestyle diseases are rising, owning the insurance, the medicine, is a high-conviction play for institutions. Their order book for chronic care is expanding while others face cyclical downturns. Hindustan Unilever, HUL, accumulation zone. The narrative: HUL was one of the few Sensex gainers today, plus 1.37%. The value moat: when the market gets stormy, investors hide in the supermarket. HUL's moat is its distribution infrastructure. Analogy: if the stock market is a volatile ocean, HUL is a heavy anchor. Institutional data shows quiet accumulation here because, regardless of whether the Nifty is at 25,000 or 20,000, people still need soap and tea. This is a classic flight to quality. The dark horse, the renewable tech pivot. Despite the indices being deep red, the renewable energy space, specifically solar manufacturing, showed a, quote, hidden narrative. The sector, renewable infrastructure. The trigger, Premier Energies, reported a 53% jump in profit and commissioned a 400 megawatt solar cell plant. Why it's the dark horse? While old energy, Adani Total Gas, faced pressure, the new infrastructure players are seeing an institutional footprint crossover. Government PLI schemes, production-linked incentives, are acting like business insurance, guaranteeing a certain level of income even if global demand fluctuates. The budget chessboard, anticipating the February 1st moves. As we close the books on this Friday fracture, the smart money isn't just looking at today's wreckage. They're looking at the Union Budget 2026, which is just 8 days away. If the market is a grand game of chess, the budget is the moment the rules of the game get updated for the next 12 months. The infrastructure multiplier, CapEx push. The word on the street is that the government is doubling down on infrastructure. The concept, think of CapEx, capital expenditure, as a farmer buying a high-tech tractor. It's an expensive upfront cost, but it makes the farm 10x more productive for years. The institutional footprint. We are seeing selective accumulation in heavy industries like JSW Steel and Ahsoka Buildcon. Why? Because if the budget allocates an 8 to 10% increase in infrastructure spending, these companies are the ones holding the exclusive contracts to build the nation's skeleton. Tax rationalization, the middle-class stimulus. There is a massive whisper about a shift in the tax brackets. The analogy: if you're trying to get a car to go faster, you can either push the pedal, government spending, or you can take the heavy bags out of the trunk, tax cuts. The impact: if the middle class gets more disposable income, money left after taxes, the first place it flows is into FMCG and consumer durables. This explains why sectors like Asian Paints and Titan showed relative strength today. They are positioning for a potential consumption tailwind. The fiscal discipline versus growth tightrope. The government is targeting a fiscal deficit of 4.2%. Why it matters? Imagine a family that earns 1 lakh rupees but spends 1.1 lakh rupees every month. The 10,000 rupees extra is their deficit. If they keep doing this, the bank, global investors, will charge them higher interest. The narrative: by keeping the deficit low, India is telling the world, we are a safe house for your money. This is the only way to reverse the FII selling streak we saw today. The conclusion, the core lesson. Today taught us that liquidity is the mother of volatility. When FIIs pull out 4,000 crore rupees in a single day, even the strongest fundamental stories can sag. Price is what you pay, value is what you get. The 769-point drop in the Sensex might look like a disaster, but for the senior strategist, it's a revaluation event. It's the market's way of shaking out the weak players before the big game begins in February. Wealth preservation thought. In a market where the rupee is at 91.9, your best friend is asset allocation. Don't be a directional gambler, be a structural collector. Focus on companies with pricing power, those who can raise prices when the currency falls without losing customers. In times of high VIX volatility, don't chase the fastest car. Choose the one with the best brakes. Preservation of capital is the first step toward the multiplication of wealth.